Morning, ladies and gentlemen. On behalf of Edelweiss, I welcome all the participants logged in for the conference call of Zuari Agro Chemicals. From the management, we have Mr. Sunil Shetty, Managing Director, Mr. Sandeep Agrawal, Group CFO, and Mr. Nitin Goel, Head Investor Relations. Good morning, gentlemen. Good morning to all three of you, sir.
Good morning.
Sir, as always, I will first request you if you can just give us some quarterly highlights for Q4 and also FY18 result summary, and then also if you can share some industry trend, and then we can follow it up with a question and answer session. Over to you, sir. Please go ahead. Thank you so much.
Yeah, this is Sunil Shetty. Good morning, ladies and gentlemen. Thank you, Rohan, for organizing this conference call. This quarter has been on expected lines given that this is off-season, and the company has been highly disciplined with reference to pipeline sales, which are completely nil. Though Zuari met its sales and production targets, it showed a loss due to increase in input prices and phosphoric acid, which could not be immediately recovered from the market, especially since Zuari had very little closing stocks at the end of the previous period at lower cost. The year, of course, has been much better than the previous year, showing a substantial growth at PAT level. Further, we also should look at the console level with 53% of MCFL included and 40% of PPL at PAT level. These figures, Sandeep will take you through. Coming back to the position of the rainfall, in March the country recorded below normal rainfall, and overall the rainfall received was 95% of the long period average. Before I give this to Sandeep to take you through the financial, I'd like to comment on a few other issues. One of the critical issues is DBT. We had a lot of initial teething problems. Currently, DBT is applicable across the country, but the initial teething problems are much less now since we have a very strong field force of Jai Kisan Sahayaks, which are directly interacting with our dealers, retailers to ensure POS compliance. Considering that the material sold during the period post-DBT will be mainly sold in Kharif, dues from the government, in our case, have gone up. The energy norms for the company, which were to be achieved by March 2018, have been extended till March 2020, after which the new norms will be applicable up to 2025. This means that by October 2020, we should have substantially reduced our energy due to the modernization being undertaken, and this gain that we would have would continue till 2025. We have enhanced our retail position by going up to nearly 250 stores now. GST credit collections have already started. Even though it's not as per the system, but it's been given, the government had cleared that we could claim for manual refunds. We are expecting good monsoons during the next period, though there have been some indications, especially by Skymet, that and AccuWeather, that there will be possibly early rainfalls, and then it might stop and it might be not evenly distributed. We are hoping for the best. From here, I would like Sandeep to take you through the financials.
Thank you, Mr. Shetty. Gentlemen, now I will take you through the Q4 numbers as well as year as a whole. So, the numbers what I will be taking you through, this will be all the numbers, three companies together. As you are aware, Paradeep is 50% joint venture company along with OCP. So, their numbers are consolidated at the PAT level only as far as revenue and EBITDAs are concerned. So there we have only MCF and PPL, MCF and Zuari. So, but for the investors' benefit, I will be giving you the complete, all three companies' number together so that you have the clear picture. As consolidated numbers are already uploaded in our website, which is as per the standards. Revenue from operations during the quarter, we have registered about 1,118 crores worth of sales, which is 15% higher as compared to last quarter in FY17. This is for Zuari Agro Chemicals. And if we take all three companies together, then we have registered a revenue of 2,704 crores as compared to 2,404 crores compared to the last quarter, registering an increase of 12%. For the year as a whole, Zuari has registered a 14% increase from 4,092 crore to 4,650 crore, and all three companies together, we registered 9% increase from 10,174 crore to 11,134 crores. At EBITDA level, Zuari has registered 61 crore EBITDA during the current quarter as compared to 77 crore EBITDA of corresponding previous quarter in FY17. So there is a degrowth of 21% in EBITDA. This is mainly on account of higher forex cost and finance cost. During the quarter, the currency spiked up suddenly in the month of February, so that led to forex losses in the company. EBITDA for the quarter for all three companies together, we registered 197 crore as against 282 crores in the corresponding quarter. And if we take for the full year, Zuari has registered 342 crores of EBITDA as compared to 296 crore, increase of 16%. And three companies together, we registered 1,010 crores worth of EBITDA during the quarter, during the year as a whole, as compared to 843 crores in the corresponding previous year. So the increase of 20% in EBITDA for all three companies together. At the PAT level, during the current quarter, our PAT is flat for all three companies. It's 1 crore positive as compared to 88 crores in the corresponding quarter last year. And for the year as a whole, we registered 254 crore PAT as compared to 46 crore PAT in FY17. So almost increase of 200 crores year to year. On the debt side, the total debt for all three companies together stood at 6,176 crore as compared to 6,687 crore, a decrease of 8% for all three companies together. And if we talk about subsidy, so subsidy dues from the government for all three companies is 3,571 crore as on March 18 as compared to 3,456 crore in FY17. So it's marginal increase of 3%. So about 60-70 crore subsidy has gone up. That's all from my side, Rohan.
Yeah, hi, Rohan. Can we go ahead with the Q&A session now?
Sure, thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask questions may press star and 1. We have the first question from Gargaritika from Qtr4 Investments. Please go ahead.
Good morning, sir. So I want to know, the outward freight has increased 30% on Zuari standalone to 391 crores. Hello?
Yeah, Ritika, come again.
So the outward freight. So what exactly is outward freight? And it's increased 30% year on year in FY18 for Zuari standalone.
Freight. So freight is nothing but, if you see our total volume has gone up as compared to last year. This year...
Volume numbers?
Yeah, volume number, if you look at last year, we have sold 14,77,000 tons in Zuari Agro. And this year we have sold 17,41,000 tons. So there is an increase of 18% in terms of quantity.
Okay.
So that is the main reason for increase in freight.
And so other expenses on for Q4 are up 55% to 59 crores. This is on account of?
This is on account of, there are two parts to it. One is normal expenses, which we have incurred on account of AT Karni, etc., because we embarked upon this AT Karni program, and there are certain fixed costs which we have paid to them. And apart from that, in accounting terminology, the forex losses has to be bifurcated between finance cost as well as other costs. This is the interest differential. So certain portion of forex cost also has gone into other expenses.
So could you give me the breakup for the AT Karni cost and the forex loss forming part of other expenses?
That I will give you offline. You can write to Nitin, but Nitin will be able to send you the details.
Okay. And so has the financial closure for the ammonia and urea revamp been achieved for Zuari Agro?
Not yet. We are on the verge of closure with few banks. As you are aware that PSU banks and because of the NPA and other issues, there are a lot of, you can say, little bit hesitation in financing the new projects because of the large NPAs. So still we are talking with few bankers. We are on the verge of closing with 2-3 banks. So I hope in next 2 to 3 months we will be able to close this.
Our financial closure has moved now to somewhere by July.
Okay. So, and for Zuari Agro, on a standalone basis, if we don't consider other income and exceptional items, on the PBT level, we are at a loss in FY18.
Yes.
So, sir, what is the outlook and what is the reason for this?
You know, the major reason for this is the higher finance cost. If you look at the EBITDA and other things, the company is doing well at the operating level. But
so EBITDA margins are also lower, sir?
EBITDA margin is lower for the current quarter, mainly because we could not pass on the price increase of raw material. But otherwise, up to Q3, margins were quite good. And if you really look at the last year numbers, where we posted a loss of 60 crores at Zuari Agro Chemicals, as against that, we have posted a 42 crores PAT in this year. So the major reason behind this, we had a subsidiary earlier, wholly owned subsidiaries, which got merged into Zuari Agro Chemicals, and through those subsidiaries, we have acquired Mangalore Chemical. So there was a lot of interest cost which has come into Zuari Agro now. So at merged level, after merging all three entities, the finance cost has gone up, which is, if you if you compare, though it has come down as compared to last year.
It has 5% to 315 crores.
Correct. So that shows that operating level company performance has gone up, and as against 60 crores, we have posted a profit of 42 crores. So, of course, this interest cost needs to be brought down, and that is why company was embarking upon, raising equity and deleveraging the balance sheet, which we are in the process. So, once this deleveraging is done, then, of course, my interest cost will come down substantially.
Okay, and so this 42 crores PAT that we are talking about, we've also, our other income, can you correct me if I'm wrong, includes 23 crores account on change in our policy for accrual of interest on delayed receivables?
Yes.
And also it includes, one more thing. This urea concession benefit of 20 crores for FY17 is also included in this other income?
No, that is for MCF. Urea concession, I don't see it is there in Zuari, because you are seeing the consolidated results. So this 23 crore income we have booked, yes, to bring the consistency in the accounting policy. Earlier we were booking interest income based on the hybrid method, which is not correct. So that is why we have corrected, and now we have brought in line with the accounting policy. It is booked on the accrual basis.
Yeah, but then if we look at this accrual, this 23 crores of if we remove this accrual of 23 crores, our PAT reduces further, right?
Yes.
Yes. So, as you said, you rightly said in the beginning that if you remove the other income and exceptional, so that is part of other income only.
Okay. And so this exceptional item of 14 crores on account of provision made against ICD and accrued interest is what exactly? Which ICD is this?
This is basically we have given one ICD to UB Group. Now looking at the condition of UB Group where, everywhere their investments are attached and companies are going into liquidation. So we thought it is prudent that to make provision of this ICD. We don't know whether it will be coming or not, and that is why we have done that.
So, Radhika, the indications of the accounts of the company of UB Group very clearly says it has adequate assets to cover up for whatever liabilities they have, and they fully acknowledge the liability and the interest on it. But because of the fact that the Enforcement Directorate is going and attaching the companies, we just thought it is much more prudent to. That doesn't mean that we will not be recovering it. We will be going right out to recover it, but it's prudent to provide for it.
So what are the total outstandings for UB Group? 216 crores, right?
No, they are different.
There are two things. 216 crore was the investment in Mangalore Chemical once we acquired that company. And immediately after acquisition, we have made the provisions against that investment because of during the forensic audit, it came out that it's a clear-cut diversion of fund. And we have filed all the legal cases against that recovery of 200 crores. And this is, apart from that, this amount was there, which they were servicing till 2017 June. After that, they stopped servicing interest also. So that is why we thought it is prudent to provide for this amount also.
So there's no other ICD other than this 14 crores against UB Group?
No, nothing.
Okay, and so in Mangalore Chemicals, our performance, if we look at the consol basis, for Mangalore Chemicals only has improved on account of reduction of interest?
Yes.
So how are we saying that interest costs have gone up? 22 crores is the reduction on account of Mangalore Chemicals interest?
Yes.
And PPL has performed well. From 33 crores has gone up to 58 crores for this year. So basically, our consol performance is good on account of reduction of interest in Mangalore Chemicals and improved performance of PPL?
Correct.
So how do we expect them to do in FY19 and going forward?
Going forward also, all three companies will do well. Zuari also, like Qtr4 was an exceptional quarter because price increase could not be passed on. But now we have passed on the price increase in the current quarter.
But of course, I would like to just intervene, Ritika. There are two aspects of this when you look at the last quarter. One of the aspects is any kind of a price increase that you can do is based on how much of material have you got which has the older stocks in it.
Right.
Where Zuari was concerned and the whole agri-business is concerned, we actually captured a fair share of market share. We were at a position where as on 31st December, we had very low stocks. Yes. So most of the stocks that came in the next quarter were from the higher cost material, while our competition had material which was from the lower cost. So I think, there was a period where we could not recover this from the market. Now we are all, looking at that, and I think we've already enhanced our maximum retail price. So we are in the process of recovering this from the market. But the last quarter, to that extent, was not something that we could.
Okay, and so what has been the price hike in Q1 of FY19 for all fertilizer companies? What is the price hike that you've taken in your MRP?
MRP now for DAP it stood at 25,100 rupees. So it has gone up almost, I think, close to 1,500 to 2,000 rupees.
Okay. And for NPK? NPK is...
NPK is in the proportion now. You can, exact numbers I don't have right now, but everywhere price increase has happened. and it will continue to increase. We will continue to increase the price now since currency has gone up further. So we are expecting further price increase now in this month.
Okay, and so what would be the EBITDA per ton for FY18 for all these, for NPK?
So NPKs separately I can't give you right now, but for company as a whole, if you look at then Zuari is at 1950 rupees EBITDA per ton as compared to 2000 rupees last year, and PPL is about 3700 rupees, MCFL is again at 1900 rupees around.
Okay, and so what do we expect it to go ahead in the year going forward?
Year going forward, generally we always say that EBITDA per ton, we always tries for 2000 to 2200 rupees in case of PPL and MCF, and Paradeep anywhere between 3500 to 4000 rupees. That kind of number we always look at, achieving the EBITDA numbers.
Considering the currency and other raw material cost increases, do we think that it is achievable?
Yeah, currency is fluctuating right now, so you never know this currency will remain at this level or it will come down. So for the whole year, I cannot give you any guidance as of now, looking at the currency as well as the prices in the market. The DAP prices are not coming down. Imported DAP is still at $430, and phosphoric acid current quarter is also very high at $730. So we are expecting decrease in all the commodity prices in the coming quarters. So that will obviously help in increasing the contribution margin, because price increase, whatever happens once, so the way, the increase in price takes time, similarly decrease in price also takes time. So always there is a time lag. So which we feel that will help the company in achieving the margin. So as of now, very difficult to give you the guidance for next year.
And so what is our capacity utilization for FY18?
Capacity utilization is towards the maximum. Zuari, we have some scope of increasing little bit on the NPKs, so which we will try to increase our production this year. But otherwise, all three plants are running almost near the capacities.
And this has been a year of record production. I think Zuari produced the highest ever in its life.
Okay, and so we will be under MAT for how many more years?
Still, I think another 3, 4, 5 years minimum.
3 to 5 years minimum. Okay, so thank you so much.
Thanks.
Thank you. The next question is from Krishna Ashar from HDFC Bank. Please go ahead.
Hello.
Yeah, Krishna.
Afternoon, sir.
Afternoon.
Sir, a couple of things. Firstly, can you just give an update on the QIP part as to have we tied up the issue and that stuff?
No, we are still working on it. I think the market has been different and it's been fairly volatile. That's one part of it. The second issue has been the DBT, which is now stabilizing. So I think with these, we've been advised just to delay this to a certain extent, which is what we are doing. And we look towards getting this together again.
Sir, any expected timelines?
I need to get this into place by September, definitely.
Okay. Other part was on the price hike for the NPK fertilizer, sir. I assume a hike was taken in Q3 FY18, right? The hike that we're talking about.
What? You're talking about your...
price hike in MRP of DAP and NPK fertilizer, sir.
No, it was taken in Q4 and the prices could not be passed on, though we have taken the price increase. But looking at the competition in the market, we could not realize the full price increase. Marginally, we could realize. Now, the major impact realization is coming in the current quarter. And current quarter, we are further increasing the prices.
Because of the exchange situation.
Yeah, so there are two factors. Phos acid prices have also
correct. The exchange. Correct.
Dollar has also moved up.
Yeah.
Okay. Sir, can you quantify the expected price hike?
If expected price hike, like as I said, we have already taken the last MRP was about 25,100 rupees for DAP, and now we are taking further price increase of about 700, 800 rupees in DAP. So it will be close to 25,800, 900. So depending upon the competition as well as the currency and phosphoric acid prices and international DAP prices, we keep on evaluating our prices for DAP and NPKs, and similarly we take the price hike. So this is the next price hike we are talking about.
We generally command a higher price than our competition.
Okay. Continuing on the price part, sir, the government has already increased the subsidy rate for DAP, I guess, right? It has moved up to 10,400 approx, about 1,400 rupees an increase.
Correct.
In spite of this increase, industry-wide, people are taking price hikes.
Yeah.
So, do we expect the demand to be affected by the farmers?
No, I don't think so. If monsoon is good, then farmers are going to buy the fertilizers what they need for their fields. So these price increases are in line with the international prices of raw material, and government has realized that, so it is partly offsetted by the increase in subsidy, but that is not good enough to take care of the increase in prices. So that is why price increases are happening, and everybody is fine with this. Everybody is selling in the market also, farmers are also buying.
The fundamental issue is actually coming out of China. I think currently China is not exporting. So any DAP out of China. It's something that the government themselves have taken a decision. They're holding up their production to the extent of what is required within China. So that has to a large extent created this problem of rising DAP prices, because the demand is much higher than the supply.
Okay. Noted, sir. The third thing would be, sir, an update on the CAPEX. The CAPEX for phosphatic fertilizer plant in UAE, expected debottlenecking in PPL, and a new complex line in MCFL. Any update on these three parts, sir?
See, we are doing a modernization in Zuari, and that is closely linked to doing a financial closure. I'm looking at the financial closure by July end. The modernization is broken up into two parts. The first level of modernization that is going to be done in October this year itself, and we are taking a shutdown for that purpose. And that would take into consideration some key equipment which is going to bring down our energy norms to a certain extent. And the next part will be somewhere closer to October 2020. Or closer, earlier than that, but the commercial production will start in October 20. So these are the two. So we are ready for whatever we require for October, but we need to get our funding into place for the rest of the investments that we have to do. In terms of Paradeep, yes, we are putting up a new line. We are already in talks with our partner. Currently, what is really happening, our partner OCP and we are sitting together. We are working out the in-depth study of what will be the investment, what will be the returns on the investment, and how we are going to finance it. And where MCFL is concerned, MCFL will be going in for energy reduction very, very quickly, and and right after that, we will be looking at the second line that we need to build in MCFL. So at the moment, all these workings are being done. The key investment that is being committed is being committed, as I said, for the modernization in Zuari, for the revamps that we are doing in PPL of 400,000 tons, and that's it. The rest is all under under process.
And Krishna, for your specific answer to the question, PPL revamp of the trains are already on. We are expecting that 2 trains will be over in next 12 to 15 months, and another 2 trains will take another 1 year. So in 2 years' time, 2.5 years' time, we will be upgrading all the 4 trains, which will give me additional 4 lakh tons.
Okay. Noted, sir. So the last part was on the qualified opinion in the audit report, sir. Any negative repercussions of that 119 crore provision?
So, well, this Peru investment, we are carrying in our books since long. And, it is a joint venture with Mitsubishi through a joint venture company in Singapore. We hold 9% in the Peru assets. Now, Mitsubishi, for some strange reason, they have impaired the total assets in their books, that joint venture company, which we hold 30% in Singapore. So that led to this dispute between Mitsubishi and the Zuari Group. So the asset at Peru, the company which holds the asset in Peru, they have not impaired these assets at all, and they are carrying at the full value, where the ultimate asset lies. So since Mitsubishi has impaired their investment in this particular joint venture, so that led to this discussion with the auditors. So we feel that there is no impairment because the parent company has not impaired the asset. But since the company which holds this asset, where our investment is there 30% in Singapore, that company has impaired, that led to this particular qualification. So management, we are quite certain that there is no impairment, and that clarification also given in the notes to accounts.
We have done an independent valuation, and that does not show any impairment.
Okay, sir. Okay, I'll come back in queue.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from the line of Payal Malwani from WOW Investments. Please go ahead.
Hello.
Yes, Payal.
Yeah, good afternoon.
Good afternoon.
Coming back to the losses, as you have said in the previous quarter, that you were looking for good demand and good outlook in coming quarters. But then this loss was basically due to the increase in the input cost. Can you explain more, sir?
Your voice is not coming clearly, Payal. We could not heard you.
Yeah, now can you hear me, sir?
I'll request you to use the handset if you're using a hands-free device. Your voice is kind of muffled up.
Yeah, can you get me now?
Yes.
Yeah, sorry for that, sir. My question was coming to the loss in this quarter. As you had said earlier, it was due to the increase in the input cost, right? Now, which particular into percentage can you claim that how much was increase in the input cost for this particular quarter?
So this particular quarter, if you really look at the phosphoric acid prices, has gone up from 657 to 600, almost $110 gone up in phosphoric acid prices. 78% to $678. It was earlier $580 around. So this increase in phosphoric acid price, at the same time increase in currency in February 2018, which led to forex losses. These are the two reasons for higher cost. As I said, we increased the prices, but these prices could not be passed on fully to the market. So the increase in input cost could not be transferred to the market as well as dealers and retailers. That led to the losses.
Right. I got your point. Now, what can you give me an outlook for the same? That do you anticipate that these, volatility in the product and currency would remain as it is, and how do you mean, into what percentage do you, pass on the prices to the market? What the percentage of the price hike, sir?
You cannot quantify in the percentage because it's a demand supply, and how much market can absorb the price increase. We need to evaluate all the factors, and based on that, price increases are happen. Generally, we try to pass on all the prices, whatever price increase happens in the market. But currency is so fluctuating. In one day, It can go up 50-60 paisa. One day, it comes down. So we need to take a moderate view. Based on that, we work out and we pass on the prices. So very difficult to give you outlook as of now because currency is still very fluctuating. Last year, it was quite stable throughout the year. Only it gone up in the last quarter. So let's wait for a quarter. When currency gets stabilized, then you will be getting some sense where we are heading. But as of now, we are trying to pass on the increase in acid prices as well as the currency to the product prices. You will see that in the coming quarters also, we will be able to increase the prices if it continues like this.
Right. So one more thing, how much percent has the input cost increased on an average from the last quarter, say from December quarter to this March quarter? How much percent has the input cost increased in all segments?
So percentage, again, I am saying, you can send your queries to Nitin Goyal. He will give you the exact percentages. But looking at the phosphoric acid price, which has gone up by another $50 in the current quarter, which comes to about 8%. And at the same time, currency has gone up by another 3 rupees. So you can work out that the $50 increase in phosphoric acid at the same time 3 rupees in currency. That's a hell of it's a big number.
Yeah. Okay. So thanks very much. So you just foresee that coming quarters when you pass on the prices, we may again see Zuari into a profit-making segment, right?
Sure.
Yeah. Thanks very much and all the best.
Thank you.
Thank you. Next question is from the line of Siddharth Mohta from Principal India. Please go ahead.
Good afternoon, sir. Sir, trading used to be a very important component for a couple of our entity, especially MCF and as well as for Zuari. Sir, so what can be EBITDA per ton expected in that trading segment?
Trading segment is, again, it's a dynamic thing where we keep on comparing from the international prices whether the current price increase, what we have factored in the market, whether that gives adequate margin in trading or not. And typically, our trading volume is totally dependent on the what margins we earn on the trading. So that's the driving force. So in the current year, we are again keeps on evaluating how much DAP we should import or we should not import looking at the current prices.
What it was in FY18, the margin that we have made in the trading segment?
I'm sorry to interrupt you, Siddharth, but we can't hear you.
Yeah, no, it's okay. Yeah, sir, what was that margin quantum in FY18 on our trading segment?
So I gave you the overall margin per ton. So for the detailed breakup of trading as well as your manufacturing, you write to Nitin, he will provide you the numbers.
And, sir, with respect to MCF, you were saying that there was some adjustment of 20 crore on account of urea. So what it was and when it was being accounted for?
So basically, it's a escalation claim because MCF is still on the NAFTA, and NAFTA they do the benchmark prices because it is not simple calculation like gas where you get pool price every quarter and based on that you account for the escalation and de-escalation. So it is nothing but an escalation claim what we got from the ministry, DOF, which has been accounted for.
Okay, it has been accounted in our profit and loss account.
Yes.
and so it will be under other income, sir, or how much?
No, it is urea only. It is for the urea only. Escalation, de-escalation, every year you account for.
Year to year.
So the thing is, when we account for this escalation and de-escalation claim, we take certain assumptions. And we generally go by little conservative assumptions, looking at the NAFTA benchmarking, because we don't know what benchmarking government will take. So when MCF accounted for this in the previous year, so they accounted for it conservatively and they got little higher money out of the escalation claims. So that has been accounted for in this year.
Especially in this quarter, actually.
Yeah. Because that claim we got in I think Q4 only.
Correct. And sir, with respect to energy efficiency notification, which has been postponed to 2020, so in between FY8, that is in FY19 and in FY20, will there be any charges that government may leave it on us?
So for MCF is already below 6.5, so there is no charges for MCF. For Zuari is at 6.6. So Zuari has to come down to 6.5 or below. As Mr. Sethi explained a little while back, that we are taking a shutdown in this October and we are changing certain equipments in October. Post that, we feel that we will be below 6.5. So till the time we reach 6.5, government will be charging 2% on the delta, whatever they pay on the subsidy as well as the energy consumption. Suppose my energy payout is at 7.03 and my actual, the government has notified 6.5. So between this 6.5 to 7.03, they will charge 2%. So which is a very nominal amount. It will hardly comes to even 100, not even 100 rupees.
Correct, sir. And sir, within MCF, any update on GAIL gas pipeline which was expected to come in December 2018?
So GAIL pipeline, again, we are expecting, we are still sticking to the same deadline that December as it should come. It may spill over maybe by a month or two, but this financial year is definitely going to come.
Sir, that was very helpful. Thank you.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. The next question is from Giriraj Daga from KMS Area Family Trust. Please go ahead.
Yeah, hello team. Just a bit on the trading side of it. So what was the overall trading volume in last year in FY18?
So last FY18, the company produced, all three companies together, we produced 30,88,000 tons. Correct. And we have sold 40,49,000 tons. So all three companies together, we are close to 1 million ton of trading.
Okay. Now, like you will be taking a shutdown in Zuari. So should we expect that the trading volume this year will go up? And you have to,
shutdown we will be taking only in urea. So urea generally my reassessed capacity is 4 lakh ton and we produce something beyond reassessed capacity only. So urea shutdown will not affect my trading volume or maybe increased trading volume.
Okay, so what is the guidance for volume in FY19 you would like to give with?
We don't give guidance for volume because as I said, it's a very dynamic thing because entire trading is dependent on the international prices.
No, the overall volume, not the trading part of it, overall volume.
So we don't give overall even guidance also for volumes, etc.
Should we say that we will be able to grow better than the industry per se?
Yes, that we can say.
Okay. Coming back to the second part on the working capital side of it, so like we are right now about 3,500 crore kind of some from subsidy side of it. What is your best case estimate? What will number this look like in FY19 and?
Very difficult to say. Very difficult to say because this year only government has rolled out the DBT and we feel that these teething problems are 50-60% over and we should expect good inflow of subsidy in during Kharif season because all this material will be sold and the government is also committed to clear the past dues relating to balance claim and freight claim. But then let us wait for another 3-4 months how government demonstrate this. Let Kharif season be over, then we will be able to see the numbers. As of now, very difficult to say what will be the guidance.
Okay. Coming to the last part on the capex and free cash flow. So let put it this way that excluding the subsidy part of it, what amount of debt reduction we are envisaging? So assuming there is a 500 crore increase in subsidy by year and then your debt is going up by 500, that's separate part. But apart from that subsidy increase, what amount of debt reduction we are looking at?
The debt is totally dependent on the subsidy. If my subsidy goes up, then obviously debt cannot be reduced. As far as market receivables are concerned, we are fairly in line. Our market receivables have come down. And other current assets are almost in line with the norms. Only thing is, we have certain recoverables on account of GST, which is under the inverted structure for the fertilizer sector. So since government has allowed the industry to file the refund claims on manual basis. So again, it's a very, mammoth job to compile all the documents and submit to the government, and they verify each and every document. So once the system is streamlined, then almost 300-400 crores, all three companies together, 400 crores around, which is stuck in GST. We expect that should come down to about 100-150 crores, another 200 crore inflow. And that's all. Otherwise, it's all subsidy.
I'll just add one more thing to this. You have to understand that currently this is becoming, subsidy this year will become a more seasonal kind of an issue. Because now once Kharif is on us, which is next month, our ultimate consumers will be lifting and it will move very fast. And the government is committed to pay us our DBT within 7 days of their liftment. So we expect that during the period of June, July, August, September, our subsidy will start coming in, and so the outstandings against the subsidies will come down, which means obviously the bank funding will also come down to that extent. But again, starting from somewhere December, January next year, and the last quarter, it will go up because that's a period, that's off-season, and that's not a period where our material is picked up by the consumer. These are positioned into the market, especially with our dealers and our sub-dealers, but it is not picked up by the ultimate consumer. So which means, again, during that period, the subsidy would go up, and similarly, bank finance would go up. What we are looking for is, apart from DBT, the older outstanding that we have, the government is really committed to clear it. We have been talking to the government. Government is working on it. It's slowly giving us information that when we should start putting in our claim. We started putting in our claim, and we are hopeful that by next year that should have come down. So net off, yes, our dependence on bank finance should come down, but that's the hope.
Okay, just a follow-up there. You mentioned about capex, but if you would like to give the amount, absolute amount, what amount of capex we are looking in FY19 and let's say FY20, and company-wise would be more helpful.
So capex will be all met by the further borrowings once we achieve the financial closure, and internal generation as well as the equity inflow. So net, if we get good subsidy this year, then obviously borrowing will come and come down, in fact, and we expect that borrowing should come down. Quantum will be very difficult to say as of now, as I said earlier.
No, but the amount of capex?
Capex, say, if we current year will be close to some 300-400 crores we may incur depending on the financial closure, and once we place the order for our your ammonia urea project. So 300-400 crores should go as a capex.
The real expenditure for capex in Zuari will come in
next year.
1920.
Okay, so this is 400 crores including all companies?
No, I talked about only Zuari.
Okay, MCFL?
MCFL will be at least some 100 crores maximum.
This year,
including the energy reduction part.
Next year. And
including the energy reduction part, 100 crore?
Come again?
Like you are saying the modernization plant in MCFL where we go for energy reduction. So that is 100 crore per se.
On that account, we will be incurring close to 100 crores this year. Total capex is about 350 crores.
Okay. Thanks a lot and all the best.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next, we have a follow-up question from the line of Ritika Garg from Qtr4 Investments. Please go ahead.
So my question is on interest cost. So for Zuari Agro, for FY19, what do we expect our interest cost to be?
It is a function of, borrowing and the rate of interest. So if my borrowing comes down, my interest outgo will come down. And borrowing I cannot guide as of now, looking at the DBT and other issues. So let us get some clarity on the inflow of subsidy in next 2-3 months. So probably in the next con call, once we have Q1 results, then probably we will be able to get some view on this. As of now, very difficult to say.
Okay, thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next, we have a follow-up question from Krishna Ashar from HDFC Bank. Please go ahead.
Hello.
Yeah, Krishna.
Sir, the revenue has gone up by about 16% YOY. Can I assume safely that it's because of volumes?
Yes.
And sir, any specific reason for increasing volumes in the fourth quarter?
Fourth quarter revenue has gone up by 15-16%, yes. So it is, no, in terms of volume, if you really look at the fourth quarter volume for Zuari Agro Chemicals is, in terms of quantity, it is almost flat, 380 to 380,000 tons. So it has gone up because of the price increase and the raw material cost increase. So that is the main reason.
Quantities are flat.
Quantities are flat.
And the price increase is only in the DAP part, right? DAP and the NPK fertilizers.
No, everywhere it has gone up, all the NPK as well as your DAP. Now, you really need to look at, in FY17, the prices were extremely low because acid prices were also low. Okay, in current year, in FY18, it started going up from the first, second quarter itself. Okay, so overall price, even your gas prices have gone up, your urea subsidy has gone up. So it is a function of price, input price rise. Quantity is flat for Q4.
Understood, sir. Okay, coming on to the next part, the finance cost has also increased, although it has decreased on an annual basis, but there was a spike of about, 10-15 odd crores in this quarter. Was it due to the increased borrowings for DBT teething issues that you mentioned?
Correct. So DBT, subsidy, the SBA itself came quite late in the current quarter. So this is one part. Second part, we have almost, earlier we have about 250-60 crores stuck in GST, about 250 crore in Zuari. So we got some 60-70 crore refund only in the last week of March. And at the same time, your DBT, as I already said that, and Forex. Third is Forex. Forex also hit the finance cost. All the three combination.
Okay. And sir, the other income increase is due to that change in accounting policy for the dealer interest, right? So that is the whole thing there.
Correct. It's a one-time thing. So now I don't think it will come.
Okay. And sir, just on the capex part, on the revamp part for Zuari, we are taking a shutdown in October 18, right?
Yes.
and we're currently at 6.6 odd. So will we go below 6.5 types?
That's what I said, that we are taking the shutdown only to change certain equipments to bring down our energy to 6.5 and below.
Sorry, I missed that part. And secondly, will it be sustainable till first April 2020, right?
Absolutely. That's the whole objective.
The second shutdown will be further bringing down our energy consumption, right?
Correct.
Okay. And any timelines for MCFL, sir? Has the government really identified any timelines? Because there was this thing.
MCFL is already below 6.5, and MCFL will be implementing this urea project, and it will take about 18 months to 24 months. But ammonia, not urea, only ammonia they will be doing revamp, and it will take about 2 years.
Okay. And on the PPL capex part, sir, you just mentioned that the revamp is already ongoing.
Yeah.
Can you give me an update on the numbers, sir, as to how much we have spent, what was the funding mix?
Funding is from internal generation because close to 200 crores. Okay, and in a span of 2 years. So this is, we are funding from internal generation itself.
Okay. That's it from my side, sir. Thank you very much.
Thank you.
Thank you. That was the last question in queue. As there are no further questions, I'd like to hand the conference back to Mr. Rohan Gupta for closing comments.
Thanks, Rayon. So thank you very much for giving us your input and having a detailed discussion. Just a couple of things before we close. You mentioned that there is definitely increasing cost pressure from phos acid, as well as now we continuously see currency depreciation. So you're looking at 700 to 800 rupees further price increase above from current level of 25,000 rupees on DAP prices. I have a couple of questions. That is 700-800, is it sufficient enough to take the further, to compensate for the further increase in phos acid prices and currency depreciation, number one? And second, that with the 26,000 rupees DAP to the farmers, would it be acceptable by the farmers, or you see that there will be pressure on volume in the industry?
I can answer this. Regarding your first question, one can't say which way the currency is going to move. And clearly, when we've looked at 600 to 700, it is what we feel that the market can take. And that is to the extent that we are building it in. When we work when we do our working, it's based on a cover being taken for the full period of when we hold this liability in our books. So to that extent, if there's an improvement in the way we handle our currency, it will only add to our profit. But any kind of a loss that we possibly can come out of it, we've already considered that. So that, one can't really say. This is something that we build in at this point of time. We feel this is what the farmer will take. And that answers your second question. I don't think there will be any pressure on the government. In terms, the government has already increased the subsidy. And clearly, this is something which will be borne by the farmer. We're expecting good monsoon. There's already a huge demand for movement of our goods. We are, as we said, we are already doing pre-placement positioning in the market, and there's a very large demand for all the companies. In fact, a lot of companies have also imported DAP, because when you look at it, we are both manufacturers and importers, but they are pure importers, and even the pure importers at these prices are getting huge amount of demand from their dealers and from their stockists. So I think this is something that the farmer will accept as an increase too.
Because there is not much DAP in the market, in the system.
Yes, sir. Actually, that was my second question. You, in your opening remark itself, you mentioned that there is a very less inventory in the system, and the focus has been more on the cleaning up the inventory. So, to start with,
that was only for Zuari.
We talked about our position.
Okay, so how is the situation in the industry? I mean, is there still a lower inventory than what we started last year at the industry level?
There's been a combination. Both of us, the manufacturers are manufacturing full tilt, and importers have also imported. And they have imported at fairly high prices. And because, as I said, currently DAP is running at $431. So we assume that personally, there would be some shortfalls of DAP in the market, but because prices have not moved downwards, and if they had moved downwards, yes, it would have helped. But I think all of us have managed to get substantial amount of material positioned. Now everything is dependent on when the monsoons are going to hit and how it works after that.
So at $431, which is the DAP prices as of now in the market, are you looking at a trading opportunity, or you are curtailing yourself from not to trade at the current level?
No, whatever purchases we bought it at a price which was lesser than this earlier.
Okay, so now at current level of DAP prices in international market at $400, now you are focusing more on manufactured.
So Rohan, I said we keep on evaluating based on the market prices and currency, whether it makes sense to import or not. So we have imported some quantity in the past, which is lower than the current prices. But now we are consciously evaluating this everyday basis, and we will take an adequate call depending on what contribution we need on the imported material. Based on that, we will import.
I can tell you one thing, that's the last requirement that had come to my table. I have said no.
Okay.
So we will not import.
Okay. That's great, sir. Thank you very much for giving us the opportunity for hosting this conference call, and I also thanks all the participants logged in for the conference call of Zuari Agro Chem to discuss their quarterly and annual results. Thank you, everyone.